Corporate strategy can be baffling. Even the most seasoned executives sometimes find themselves questioning the logic behind high-stakes decisions. In the world of big business, not everything is as straightforward as it seems. Sometimes companies buy others for their tech, sometimes to block rivals, and sometimes they make moves that leave everyone scratching their heads. The motivations can be as complex as the technology itself, and the outcomes are rarely predictable. On Christmas Eve, NVIDIA, the AI chip giant, announced it would pay up to $20 billion, not to buy Groq, a much smaller AI chip startup, but to license its technology. The timing alone was enough to raise eyebrows across the industry, as most people were preparing for the holidays, not billion-dollar deals. This isn't an acquisition. NVIDIA gets to use Groq's chip designs, but Groq keeps its IP and can license it elsewhere. It's a rare arrangement, especially at this scale, and it signals a new kind of relationship between tech giants and startups. Some of Groq's top people, including its founder, are joining NVIDIA, but Groq remains independent. This means Groq can continue to innovate on its own, while NVIDIA benefits from fresh talent and new ideas. The deal is massive, structured more like a partnership than a takeover, and has left the tech world confused. Analysts and insiders are still trying to make sense of what it means for the future of AI hardware. NVIDIA, led by Jensen Huang, dominates AI chips and seems to compete only with itself. So why this sudden pivot? Is it a sign of shifting priorities, or a bold move to stay ahead in a rapidly changing market? The timing, right before the holidays, ensured everyone noticed. It was a headline-grabbing move, and speculation ran wild as soon as the news broke. Instead of applause, the reaction was confusion. Was this a masterstroke, a defensive move, or a costly mistake? The industry buzzed with theories, but few had answers. The debate had just begun. As the dust settles, everyone is watching to see what NVIDIA's next move will be, and whether this very expensive Christmas present will pay off. And anticipation. To understand the confusion, you need to know Groq. Groq didn't build a better GPU. They built something different, the LPU, or Language Processing Unit, designed specifically for AI inference. Their chip is all about speed, generating text from large language models at incredible rates. Groq's marketing is simple. Their LPU is faster and more efficient for inference than anything else. Founder Jonathan Ross, ex-Google TPU architect, gives Groq credibility. The LPU is simple, predictable, and fast for its narrow purpose. Groq's identity is built on being the anti-GPU company. On the surface, NVIDIA's interest makes sense if Groq's tech is truly superior for inference. But when analysts dug into the details, the rationale for a $20 billion license started to look shaky. The Sprinter, it turns out, has a big weakness. As the news settled, analysts weighed in, most notably Alex Platt at D.A. Davidson, who voiced the market's confusion. Platt questioned whether NVIDIA's move was driven by real need or just paranoia. He challenged Groq's claim to technological superiority, pointing out a critical flaw. Groq's chip has just 230 megabytes of on-chip memory, tiny compared to NVIDIA's flagship, which has 288 gigabytes. That's not a small difference, it's a chasm. This memory bottleneck means Groq's chip can only run small models, while the industry is moving to much larger ones. Next-gen AI models will need terabytes of memory. In that context, Groq's chip looks less like the future and more like a curiosity. The market skepticism grew. Was NVIDIA really buying the future, or just a very expensive niche? Here's the technical mismatch. NVIDIA's chips are like massive library tables, able to handle huge, complex AI models thanks to enormous memory. Groq's LPU is a lightning-fast post-it note, blazing for small models, but unable to handle anything bigger. If the model doesn't fit on the post-it, performance collapses. That's why Groq's demos use small models. NVIDIA's GPUs are generalists, perfect for both training and inference on massive models. Groq's LPU is a specialist, great for small, fast tasks, but limited by memory. The industry is racing toward ever larger models, making Groq's niche even narrower. Betting big on a technology constrained by memory seems risky. It's like investing in the world's best horse-drawn carriage as cars take over. This is why NVIDIA's investment is so perplexing. Is there something everyone's missing, or is this a costly misstep? If Groq's tech is so limited, why build them itself? So, if it's not about the tech, maybe it's about blocking a threat. Enter the defensive play theory. Maybe this is corporate chess, a defensive move to block rivals before they even make their first play. In the high-stakes world of tech, every move is calculated, and sometimes the best offense is a strong defense. Companies like NVIDIA are constantly watching the board, anticipating threats that might not even exist yet, and making sure they're always one step ahead. Who could NVIDIA be worried about? Is it the tech giants like Google, Amazon, or Microsoft? Or perhaps a deep-pocketed sovereign wealth fund looking to make a bold move? The competition is fierce and the list of potential challengers is long, but Google already has its own custom AI chip, the TPU, which it's been developing for years. For them, buying Groq would be redundant, adding little value to their already advanced hardware stack. Amazon or Microsoft, on the other hand, could see Groq as a way to reduce their dependence on NVIDIA's chips. But integrating Groq's highly specialized technology into their massive cloud platforms would be a huge technical and organizational challenge, not to mention a risky bet. Groq's memory limitations make it a poor fit for the scale and complexity of today's cloud computing needs. For most big players, that's a deal breaker. The only real threat would be a determined rival willing to pour billions into Groq, fixing its weaknesses, scaling up production, and turning it into a true competitor to NVIDIA's dominance. In that scenario, NVIDIA's deal acts as an insurance policy, neutralizing a potential future competitor before it can even get started, and protecting its market share from unexpected disruption. By licensing Groq's technology and hiring its team, NVIDIA effectively takes Groq off the market as an acquisition target, closing the door on any rival ambitions. It's an expensive way to sleep at night, but for a company with so much at stake, Maybe it's a price worth paying to secure the future. Still, it's a high price for peace of mind, and in the world of tech, peace of mind is never guaranteed for long. Despite skepticism, analysts are hesitant to bet against Jensen Huang. His track record is legendary. He's made bold bets before that paid off. He transformed NVIDIA from a graphics company to an AI powerhouse. When a leader has that kind of history, people assume he sees something others don't. Maybe there's a hidden breakthrough in Groq's tech, or a long-term strategy only NVIDIA understands. Perhaps it's a play for a future market where small, ultra-fast models matter more. The deal could be a masterstroke waiting to be revealed, or maybe it's just a costly gamble. For now, faith in Jensen is the strongest argument for the deal. NVIDIA's Groq deal remains a $20 billion question mark. Analysts are skeptical, but no one's betting against NVIDIA just yet. The consensus: wait and see. NVIDIA must now prove the value of this massive bet. This could be a turning point, embracing new ideas for the next era of computing. Or it could be a costly distraction, remembered as a moment of hubris. For now, we have the facts, the doubts, and Jensen Huang's formidable track record. The story is just beginning. Will this be a stroke of genius, or an expensive error? Only time, and NVIDIA's next generation of chips, will tell.